Federal Transport Minister Stephen McKinnon made an announcement in Brampton this morning promoting two initiatives aimed at boosting trade.
And investments from the Trade Diversification Corridors Fund and the Arctic Infrastructure Fund will increase the capacity of our trade and transportation infrastructure, strengthen Canada's sovereignty and presence in the Arctic, and improve Canada's ability to move imports and exports across this country and to and from the rest of the world.
Canada is making a bold move to grow stronger without leaning on the United States anymore. New trade routes and Arctic projects could bring jobs, money, and global power to Canada, while America risks losing one of its biggest trade advantages as Canada opens doors to the rest of the world. Two federal funding programs opened simultaneously that, taken together, represent the largest infrastructure investment in Canadian trade diversification history. Transport Minister Stephen McKinnon announced the launch of the calls for proposals for both the $5 billion Trade Diversification Corridors Fund and the $1 billion Arctic Infrastructure Fund. Together, these two programs represent $6 billion in federal investment directed specifically at trade corridors, northern transportation networks, and Arctic logistics capacity, all structured around a single stated objective. That would have been extraordinary to hear from any Canadian minister just 2 years ago, help Canada double its non-US exports. This is not a routine infrastructure announcement. The language embedded in the program documentation is direct about what is driving the investment. The Trade Diversification Corridors Fund will strengthen supply chain capacity, relieve congestion, and address infrastructure gaps that limit Canada's ability to reach global markets beyond the United States. That phrase, beyond the United States, appears in the program's primary objective statement. The Canadian federal government is funding the physical infrastructure of trade independence from Washington, and it is doing so at a scale that will define the shape of Canadian export capacity for the next generation. The context for understanding why these programs are being launched now runs directly through the trade conflict. For decades, Canadian export flows were organized around American infrastructure. Rail lines running south, ports handling cargo that transited American-linked logistics networks. A bilateral trade relationship so dominant that approximately 75% of Canadian exports flow to a single buyer. That structural dependence concentrated leverage in Washington's hands. The tariffs on steel, aluminum, automobiles, and forest products that the Trump administration imposed beginning in 2025 demonstrated in concrete economic terms what that concentration of market dependence means when the American administration chooses to use it as coercion. The Trade Diversification Corridors Fund and Arctic Infrastructure Fund are the physical infrastructure response to that demonstration. The $5 billion Trade Diversification Corridors Fund operates through three streams. The first targets high-impact projects diversifying trade through Canada's core corridors, using what the program documentation calls a systems-based approach, bundling related infrastructure projects into integrated packages designed to maximize trade diversification benefit rather than funding isolated individual upgrades. A port expansion without the rail capacity to feed it, or a rail expansion without the port capacity to receive it, produces limited diversification value. The systems approach addresses entire corridor bottlenecks simultaneously. The second stream targets collaborative, multi-stakeholder solutions, addressing specific choke points that prevent Canadian exports from reaching overseas markets. Eligible focus areas include enhancing intermodal capacity to increase trade with non-US markets, including through inland ports, optimizing existing transportation assets to support overseas export flows, and increasing transportation capacity for bulk commodity exports. Canada's bulk commodity export profile, grain, potash, critical minerals, aluminum, LNG, forest products, depends on port, rail, and terminal infrastructure operating at sufficient capacity to compete on volume and reliability with alternative global suppliers. Where that infrastructure is constrained, export opportunities are lost regardless of commercial demand. Stream 2 addresses those specific constraints. The third stream supports regional transportation infrastructure projects, addressing gaps that impede local economic growth but do not fit the large-scale corridor model of the first two streams. Regional projects may also serve as enabling links to larger corridor developments, creating the connective tissue between community-level infrastructure and the national trade networks that reach export markets. The $1 billion Arctic Infrastructure Fund operates through a separate but complementary structure. The program will help build and expand what the government describes as dual-use transportation infrastructure across the Arctic infrastructure, serving both defense and civilian purposes simultaneously. Roads, rail, airports, bridges, and ports that serve Canadian Armed Forces operational requirements while also supporting economic development, community connectivity, and export access for northern and Indigenous communities. The first Arctic Infrastructure Fund stream supports large-scale defense and civilian-serving projects that advance key transportation corridors and close long-standing northern transportation gaps. These are the projects that will improve regional connectivity, promote Arctic economic development, and strengthen defense operational readiness, all through the same physical infrastructure. A road capable of moving military equipment is also capable of moving cargo. A port capable of handling naval vessels is also capable of handling commercial shipping. The dual-use designation leverages defense investment to produce civilian economic benefit and vice versa. The second stream funds community and industry-driven projects on a smaller scale, connectivity improvements, supply chain enhancements, safety upgrades, and emergency response capacity. These projects may serve as enabling links to the larger corridor developments funded under the first stream, building the last-mile connections that determine whether major infrastructure investments generate actual economic activity for northern communities or remain isolated facilities. Eligible locations under the Arctic Infrastructure Fund span the Yukon, Northwest Territories, Nunavut, the Nunavik region of northern Quebec, and the Nunatsiavut region of northern Labrador. That geographic scope covers virtually the entire Canadian Arctic territory, where transportation infrastructure has historically been sparse, prohibitively expensive to maintain due to permafrost conditions, and largely disconnected from the national logistics network that moves Canadian goods to export markets. The Port of Churchill sits at the center of what these programs are designed to build toward. Canada's only deepwater Arctic port connected to the continental rail network, Churchill sits on Hudson Bay at a geographic position that offers one of the shortest maritime routes from the Canadian prairies to northern Europe. Since 2018, the federal government has invested over $320 million to support the Arctic Gateway Group, the Indigenous and community-owned operator of the port and the Hudson Bay Railway, in maintaining and developing the corridor. In November 2025, Ottawa announced the broader $6 billion infrastructure package. The March 2026 program launched the formal funding competition for the next phase. On March 3rd, 2026, one day before the federal program launches, the Arctic Gateway Group signed a partnership agreement with the Port of Antwerp-Bruges, one of Europe's largest ports, handling nearly 300 million tons of cargo annually. The agreement establishes a framework for cooperation in port development, intermodal transportation, and identification of new cargo streams between Western Canada and Europe. Priority sectors under the agreement include critical minerals, energy products, fertilizer feedstock, containers, and agricultural commodities. Port of Antwerp-Bruges CEO Christoph Waterschutt stated, "Europe and the European Union are accelerating efforts to secure reliable, sustainable sources of critical raw materials, energy, and agricultural inputs essential to our industrial base and clean energy transition. Canada is a trusted partner, and the Port of Churchill is a strategic Arctic gateway with significant long-term potential for the exchange of valuable resources between Europe, Manitoba, and the Canadian West." The sequencing of these events, Antwerp-Bruges Agreement on March 3rd, 2026 federal program launches on March 4th. 2026 is not coincidental. The partnership with one of the world's largest commercial ports establishes the European demand side of the corridor. The federal funding programs establish the capital pathway for building the supply side. Churchill's current shipping season runs approximately 4 months per year, constrained by Hudson Bay ice conditions. The Arctic Gateway Group is studying year-round shipping viability in partnership with FedNav, a Montreal-based maritime transport company. Extending the operating season from 4 months toward 12 is the transformation that would convert Churchill from a seasonal grain export facility into a year-round Arctic gateway for the full range of Canadian commodity exports. Minister of National Defense David McGuinty made the sovereignty dimension of the Arctic investment explicit. Investing in Arctic infrastructure is fundamental to building a secure, connected, and resilient North. Modern, reliable transportation networks reinforce Canada's capacity to operate across the region, improve readiness, and support the defense team members who serve there. The Arctic has moved from a peripheral policy concern to a central national security priority in the space of 2 years, driven by the convergence of melting sea ice, extending navigation seasons, intensified great power competition over Arctic access and resources, and the Trump administration's openly stated interest in Greenland and Northern territorial control. Transport Minister Stephen McKinnon framed the combined programs in terms that capture the dual economic and sovereignty rationale. A strong and connected Canada is essential for our prosperity, for the well-being of our communities, and for our national security. With the launch of the Trade Diversification Corridors Fund and the Arctic Infrastructure Fund, we are making the long-term strategic investments that will strengthen supply chains, unlock access to global markets, grow our economy, and ensure communities in the North and across Canada have the infrastructure they need to thrive. Both programs deploy a mix of non-repayable, conditionally repayable, and unconditionally repayable contributions.